Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the SP 500 view. I'm, for price reference, using the Emini front month continuous futures contract, and you can subtract the spread between these prices and the cash index if you are trading the spot market to get the equivalent levels. So, where do things stand? Before we jump into the technicals, as always, want to talk about market dynamics and narrative, and look at some market internals. So, solid week last week for the S&P 500, up 1.9%, and again new all-time highs on Friday. Infotech, industrials also put in new all-time highs and had solid performance last week. We also broke out higher out of our multi-week balance, just on top of sitting just on top of that balance area at the moment. Is this a look above and a failure type scenario, or have we put a base in place and we are going to extend higher? With Friday's move to the upside was preliminarily driven by the CPI figures. And we saw that that came in just slightly softer than expectations, so that drove increased demand in terms of yields. In terms of bonds, seeing Treasury yields pull back as markets again reprice further potential cuts by the Fed. In terms of where we stand heading into the week with respect to data catalysts and the market dynamic. Well, over the weekend, obviously, we have had an improved mood music out of US-China relations, and agreements being forged there ahead of a pivotal meeting on Thursday between Trump and Xi. So far over the weekend, music has been constructive, and we have gaps higher. And so this is setting the stage potentially for a pivotal session between Trump and Xi on Thursday, overnight Thursday, and we will undoubtedly get the news wires feeding back what the final outcomes of this meeting is going to be on Thursday, overnight on Thursday, like I say, heading into Friday. So really key to keep an eye on those developments. In terms of data this week, pretty light at the start of the week, but heading into Wednesday, we'll have the FOMC decision where markets are pricing, like I say, a rate cut, and then we'll have the press conference from Powell. But what we also want to factor there is that Bessent, Treasury Secretary Bessent, has announced over the weekend that the shortlist for the new Fed chair heading into next year has now been narrowed down to 5. And so it's increasingly the view from the market, I sense, will be that Powell now is moving into a lame duck type scenario, whereby the market is actually going to focus now more on potential candidates for the new Fed chair. And certainly as we head into the December meeting, you could start to see, if we've got a firm favorite in place, that lame duck scenario becomes more emboldened in the market, and potentially focus then will shift from the current Fed chair to the potential favourites and their market stance and views. So that's another dynamic to keep in mind as things develop. But we also have earnings this week, in light of the fact that obviously we are in a somewhat of a data vacuum in the US as the shutdown persists, and we're likely to see developments there certainly this week with Trump being out in Asia. So Meta, Microsoft, and Alphabet will be announcing on Wednesday, and then on Thursday we'll hear from Apple and Amazon. So that will pretty much round out the Mag 7 earnings. Obviously, we have Nvidia a bit later in the session coming into November, but the market will certainly be scrutinizing those releases, and I have produced accompanying videos for those data releases. For those earnings releases and trading scenarios to pay attention to there. In terms of the market breadth, it's improved again, obviously, with the S&P 500 components now all trading above or certainly over their 20, 50, and 200-day moving averages. They're all sitting now at above 50%. So that we've got the breadth support in the market as well, and so that is an additional support and continues to be constructive for the markets. The market has certainly digested that October the 10th wobble in terms of the tariff announcement that was the catalyst for the pullback. And like I said, we're now printing new all-time highs, and we're sitting at a gap higher here as we head into the trade on Monday. And so it's really going to be, I think, this week is going to be it's going to be very much back end loaded. We've got the earnings midweek, and then the Trump Xi meeting is going to be pivotal. So let's talk about the technical setup and see where we are. So starting with the VWAPs for the weekly and daily time frame. So on the weekly time frame, we are bullish, and 67.12 is the support zone there on the weekly. So from a weekly perspective, we need to see a close below there to start to see some momentum shift to the downside. We did get a bearish close, obviously, post that October the 10th announcement, but that was neutralized pretty quickly. And like I say, we're now trading at new all-time highs. On the daily time frame, that volume weighted average price there, the 5-period look back, sits at 67.73. So you want to keep close attention to that level. Any initial test of that area, you'd expect to find some support there. In terms of the market structure, we are positive across the board now. One time framing higher on the daily level. 68.12 would need to see a close back through there to neutralize that trend. The weekly structure, again, one time framing higher, 66.90, and then further down the monthly structure as well is also bullish. 63.71 is the key area to consider there. As of Friday's market open, in terms of the gamma profile and the gamma flip, we would be looking at 66.75 now. Gamma peak is sitting near 6,900. So that's kind of a range scenario to keep in mind. Any tests up into that 6,900 or initial forays there, we might start to see market makers or dealers try to dampen spirits above that level. Equally, any move then back through 66.75, they likely start to chase that to the downside. So while negative, while positive gamma tends to slow down price movements, it's the negative gamma that we want to pay attention to, because that tends to amplify them. So we're sitting pretty comfortably from that perspective as well at the moment. In terms of the daily structure, like I say, we do have a gap higher. We're sitting above the value area high, 68.45, currently trading 68.81 in the pre-market here. Note, we do have that ascending trend line resistance that we have tested on numerous occasions now, and continually found some supply there. That comes in this week in and around the 69.30 level, and we'll talk a little bit more about that shortly. On the weekly time frame, that 69.30 actually is a two standard deviation move higher on the volume weighted average price bands, and it's a 3 standard deviation move higher on the daily volume weighted average price band. So you can see, obviously, things are stretched to the upside, as everyone is aware, but shorting this market has been tricky, to say the very least. But there are obviously counter trend opportunities within a strong trend. And like I said, I'm going to talk a little bit more about that shortly. Those are the key levels in terms of the higher time frames, the daily and the weekly time frame, that we want to pay attention to. So let's just jump into the intraday chart and see where we are in terms of potential opportunities heading into the early part of the week. So from a weekly projected range resistance level, we have, this is versus implied volatility in the options market. 69.24 is resistance. And on the downside, we have 67.30 as potential support. The end of month straddle for October suggests 69.51 as resistance. We're well away from the 65.42, so don't need to reference or pay too much attention to that at this stage. It's more interesting, I think, weekly projected range resistance and this end of month straddle 69.50. So that's 69.20 to 69.50 area. I think that likely proves sticky initially. Now, come Thursday, if we're trading into that zone, then if the mood music changes, or as we saw with Trump in last week after meeting with Carney, Canada's Prime Minister, and things seeming positive there, the post meeting response was certainly negative and has impacted the Canadian dollar quite significantly. So we really want to see the outcome into the back end of the week before we start to think about really meaningful, constructive price action above this 69.20 to 69.50 area. So what I'm looking at as we head into the week, obviously we have a couple of gaps below us, but my weekly bull bear zone to start the week is going to be a 68.40, 68.30. Now, when you pull back into that area, I'd be watching for bullish reversal patterns to engage on the long side. And then, like I say, I anticipate that we will see some consolidation, maybe heading into the FOMC and the tech earnings Wednesday, Thursday, and any tests into the 69.20, 69.30 area. I'd be watching for bearish reversal patterns there, watch for intraday momentum divergence as an opportunity to play counter trend to the short side, and look for a retest of these cycle highs now that we have in place at 68.90 from above. Again, buy a step back in there, and then we can start to think about the 161 extension of that October the 10th decline, which would see us up trading close to 7K on the upside. The downside scenario at this stage, we would need to see a close, like I say, back below the gap that we have in place at 68.26. If we got a close back through there and we didn't find support at the gap, then I would be anticipating that we're going to take a look lower to the volume weighted average price, the anchor volume weighted average price from last week's lows, and this high volume area here. So something back into that 67.70s. From there, we'll see once again our buyer's going to step back in and take us back in to test the bull bear zone from below, and then the same upside targets if we clear the bull bear zone. If we got rejected from the bull bear zone, then the focus would shift for a move down to test weekly projected range support into the 67.30, which again is a key support area, not only from that market maker implied volatility perspective, but also from a structure perspective. We would look for that 67.30, 67.20, you'll remember from last week, as potential support, where once again we would look for a move back into to test the 67.80, 67.90 area from below. Now, these levels are updated on a daily basis through the Tickmill blog, so you can follow along not only with my trades myself that I post there, but also with updated daily trade levels and perspectives on the price action. Really, especially this week, I think it's going to be, like I say, back end loaded, and we also have additional seasonality. That the last few days of October, from a seasonal perspective, have tended to be the weakest in terms of the year. So, do we get some surprise on Thursday, Friday from Trump Xi is going to be the big question the market is going to be grappling with. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.